Last week, the S&P barely moved. VIX stayed low, and you'd expect 0DT to be pretty dull, but the data did the exact opposite. Iron Condors hit profit targets early. The put side wasn't touched for 2 straight weeks, and inside ranges were over 90%. Today, we break down why quiet markets still produce big signals for 0DT traders and what they could mean going forward. Stick around, because understanding this setup could change how you trade your next 0DT option.
So this is the SPX, VIX, and also the VIX 1D, which a lot of 0DT traders look at in the past months, and highlight what happened last week. You can see the trading range is really tight compared to what we saw in the past month. Actually, November is one of the most volatile months since April. We saw the highest VIX closing price since April. We have a huge reversal a couple of times. So compared to that, last week was pretty tight. SPX only gained.
Good little scalpy on the NASDAQ futures.
Nice.
And I kind of want to hold them, but if we bounce here, I'll get back in.
So SPX only gained 0.3%. We already saw that in Research Corner. And the VIX continued to fall. Right now it's hovering around 15, which is way below the historical average median, which is 17-ish. Yeah, haven't seen.
Kind of spooks me. Low VIX.
Yeah, low VIX spooks me too.
Week, been wrong.
You know what happens when you have low VIX, at least in the market from my experience, you get like the higher opening like we got today, and you sell off a little bit, and we're just near all-time highs, and you're like, I missed, I held on too long. I have too much long delta, and I should have got out, and you start chasing things a little bit, and then you have these kind of reversals intraday, because when low volatility, you typically get a little bit more back and forth action. Not quite when volatility is high, you get like more of a flush one way or the other. Yeah. At least that's been the experience in the market as of yet. Although you have Bitcoin under 91,000 now, it was over 92,000. You got gold selling off a little bit, much closer to its recent lows. It's been in a tight channel, but 4,200, it's 4,209.
Natural gas actually back up to $5. I just checked 5 minutes ago.
Yeah, you're right. So you got a nice.
As you said, this is a trader's market, right? So you see the pullbacks and the rally in a couple of minutes.
Yeah.
So the interesting thing is, I tried to put in an Iron Condor right at the 8:30, and then I went. I put in the market price, and I went out. I grabbed the coffee. I came back in 5 minutes, and it's the premium's actually 10 to 15% gone.
Yeah, it's funny. Even the S&P's, how fast it moves. Even the S&P's expected move is $20. Because that's one of the lowest expected moves we've seen, around 9.17, 9.15 in the day. Yeah.
So next slide. If we're looking at the long-term perspective, the last week, if we're looking at the daily move, so this daily move percentage-wise is not the average of every day. It's the average of the absolute value of the daily percentage. So if we're up 1%, down 1%, the average is not 0%. The average is still 1%. So we want to check the daily range rather than just up and down. So the last week was 0.2% on daily basis, really small. Long-term average is 0.6%. And weekly, we had like 0.3. We already saw that one. And long-term is 1.5%. So last week, definitely one of the tightest weeks we've seen for quite a while.
Sure felt like it.
It sure did.
That. On Friday, I was like, "Oh God, this is a grind."
If you lived through it, you felt it. Yeah.
Every single pullback is a short-lived and rally back up very quickly. It's just like it keeps it back and forth. This is great for swing traders and or Iron Condor traders.
Yeah.
Yep.
Yeah. Next slide. We're having some interesting charts. I try to incorporate more visualized stuff for 0DT traders rather than just looking at the numbers. So this is the what happened in the past 2 weeks. If we have the standard 20 delta and $20 Y wings Iron Condor entered in 8:30, if we manage 25% of max profit and without looking at stop loss, so we just either hold to expiration or let the losers run. This is results. We have all winners in the past 2 weeks. Actually, we have all winners.
Yeah.
So you're looking at a very small
heat, though. You got to keep in mind. There's one of them that you took some heat, almost
50% or whatever,
loser
40, yeah,
at
right.
one point.
Right, exactly. But if you look at the 940, 930, 945, that trade is actually getting close to 24, 23% winners.
Yeah.
So it
You
really
were right
depends.
there. You were
Yeah. I know you guys are like taking off at 20%-ish.
somewhere between 20 and 25%.
25, okay.
And I think this kind of validates that. I know we're only looking at, a small data set here, but, you got to be.
We're trying to ring the register here,
Yes.
just showing people that, this is not a rigged game. Anybody can have mechanics and put them to work, and how the numbers play out, and then how aggressive you want to get with your size is entirely up to you. How long you want to hold on to something is entirely up to you. I held an Oracle trade way past my comfort level, and was able to lose $1.50 instead of $15. Just showing people how if you have a directional bias, you can stay in it and be wrong, and at least give yourself, if your size is small enough, give yourself a chance to win. And here you're showing if your profit target is small enough, and 25% is significant enough. You're talking about.
Well, for sure, considering this is kind of a daily trade.
That's correct. That's correct.
Yes.
I always talk about, listen, if you're a new trader, I want to teach you how to make your electric bill. You know what I mean?
Yeah.
I'm not teaching you how to make your mortgage. I want to show you how, listen, let's concentrate on making your electric bill. And then you do your electric, you do your gas bill. And then you just, you're taking your family out for dinner bill. You know what I mean? And then we'll work our way to something else. Your job is your means. This is a place to take you to a little bit of a different level. That's what we're trying to show here. And you can, 0-day options, which are completely blown up on the amount of
Trading
customer orders that they
Yeah.
get, which has just been great. So if you're going to embrace it, let's teach you how to, or at least show you how you can be profitable on it. If you don't,
At
get
least
too piggy,
this is a very
too
good.
peggy.
Yeah.
At least this is a very good engaging tool. You can understand the market, and you can understand yourself.
Yeah.
How greedy you are on a daily basis.
Yeah.
It constantly blow in your face. Okay, I probably should not or should do this. And I asked some interesting stats. Is you see all these? I believe there are 9 trades because of the Thanksgiving. Right? Only one trade, which is last Wednesday. It was kind of last much longer than it's supposed to be. 8 out of 9 of these trades actually closed before 10 a.m.,
Wow.
which is to last no longer than 1 hour and 30 minutes. This brings up the P&L per hour up to $230 per hour. That's huge.
Yeah.
Yeah,
And that's why you got to.
And it's not that. I want to take a step back here. It's not that easy.
No,
when you're
because you have one of these that you take speed on.
Well, you had
Right.
2 or 3 actually. You have another one that was down, 25 or so. So I mean, here you put it on, and you're usually a 10-cent loser right away, right? You think
You can't.
Oh,
do this.
immediately, yeah.
Yeah, you think you gave it away too
Yeah.
cheap, you know what I mean? Because the markets get a little bit wide, and then you see it, 50, 60, 70, you maybe even see it hit your price target for a fill at mid price, and you don't get filled on it, and then it goes.
You chase the market.
Yeah.
It's not as easy as it
Gotta
looks.
stay small with these. You have
gotta
to
trade small.
This can't be like this is to your point. Like it's a small trade. Like it's an engagement.
Small big trade.
Yes, but you can't be doing this. This can't be like your whole.
No, it shouldn't be.
Yeah.
Yeah, you should have your core portfolio to balance out everything.
Yeah.
So if we were going to the next slide, if we are greedier, if we want to manage our winners at 50%, this is how it looks. Everything looks different.
Sure.
The first thing you can spot is the duration's much, much longer. We have 3 trades were held all the way to the expiration, 2 winners and 1 losers. So we don't do stop loss. This is like what, more than 200% losses for that big trade. That's Tuesday, because we have one-sided move all the way to the upside. That was like actually a huge upside day. So now we can see the duration increase from 1.5 hours to 3.4 hours. Like you have to hold these positions 2 hours longer for what? For lower P&L per hour.
Yeah. And
Right.
people don't take that into account of because everybody's trying to maximize the profit. I want to make as much as possible. And it sounds like if you're managing at 50% of the max profit, you would make a lot more profit because it's a bigger number than 25%. But it leads you to positions where you have a lot more risk. And you can see even the wideness of this distribution itself. It tells you that, if you're expecting or targeting more profits, you should also expect to have bigger tail risk. And
Oh, yeah, for sure.
That's what's here.
And also the interesting, this is not only applied to the past 2 weeks. We see the two winners at the very end. The P&L start to get into your direction in the last 15 to 30 minutes. This is what I saw for months data. So there are tons of occurrences. If you try to manage late, you probably have to wait like a 2:30, 2:45, which a lot of people start to adjusting their position way earlier.
Yeah.
Yes, and here when you start adjusting a position, I'm glad you mentioned it. The way I do it is I just move the naked option. I'm using more buying power. That's the way I do it. Now all of a sudden you've got a lot more risk on one side of the market than the other. When I get back to even or a smallish profit, I like to take it off.
Yeah.
Like,
it's hard to hold that for 50% after you've been down 100%.
Sure.
That's a big swing. It's a hard thing to do in practice.
Big hard thing to do. Now, if you want to put another trade on after that, and that's entirely up to you, but that's how I like to do it. And if you look at all of these green lines here, every one of them gave you a chance to manage.
Yeah.
Again, maybe there's one I missed.
Multiple chances.
Multiple chances to manage it for a winner. So it really comes down to your own market awareness.
Yeah.
And you might not hold this into these gains that you have. So your results might be a little bit different here. But I'm going to give you one other thing. If you're new to this, you see that red line? That will be your first trade. Okay, because that's just Murphy's law. That's just the way that works out. So beware if you're.
This is the same data set that we were looking at with the 25% managed.
Yeah,
winners,
exactly same.
Where you're out of all those trades. You don't even have those. You're not even exposed to the three occurrences at the end where two of them come back and they work in your favor and one of them goes to max loss or multiples of the loss. Mm-hmm. You don't even have those occurrences if you're managing these quick. You're out, and you didn't even know that this happened.
Correct.
You see most of the trades getting very close to 11:30 at noon, which is going to mess up your launch time.
That too.
That's why I put it.
New traders. Another fun fact for you here. Okay, for 3 years. I didn't go to the bathroom, okay? I didn't leave to do anything for 3 years, okay? I held it in for 3 years. You can hold it in for 3 years. You watch, you stay in front of every trade. Now, if you have a job and you're doing things, then 0 days are probably not for you.
Exactly.
Yep. This is something.
Unless you can just set them and forget them.
Now you have to be very mechanical.
Yeah.
Right?
Yeah, like put your profit in, you make your trade, you put your profit taking order in, you put your stop loss in, you go.
Okay.
You go to the off.
I'll give you that.
So next slide. This is more for listen, Jenny, or a lot of people don't want to enter at 8:30 based on some of Jacob's study. Some people would love to.
God, this is great work, by the way.
Mm-hmm.
Enter at 9 a.m. So this is how the things is going to change. On average, you're still able to manage the trades within 1.5 hours or so, but on average, for overall, you're gonna have a slightly longer duration because you see some losses and you miss some opportunity for the 30 minutes, just like today, right? If you put in 9, pretty much 20 to 25% of premium is already gone in the first hour, first 30 minutes.
Yeah.
Yeah. When I walk in, the 15% premium is already gone. So this is.
Go ahead.
Nothing.
No, I know you can't throw things out here, but if that big green line, the last one, we're on 11:26.
That's the same one that we saw in the previous chart.
Right. If that doesn't come back, these results look like crap.
Oh, that's true. Yeah, that's true.
I mean, so that's the other way of looking. That's the other way of looking at it, right? So. You don't stay mechanical, or the loss becomes too much because your count too small for these kind of strategies, and you have to take that.
Yeah.
Your results are completely different than everybody else who just followed this mechanically and was able to hold on.
You needed the lottery ticket.
That
was the lottery ticket.
That was the lottery ticket.
That played out, and you're only going to get that, 10% of the time. So, this one, it worked.
Or less,
This one worked, but.
So it's a good thing to put out there.
Sure.
Yeah.
So next one.
Because when you're really trading and you see those this is why I say I kind of hide my P&L most days. I mean, I'll take a look at it every once in a while. I don't like to look at it intraday because
You can't feel it. You don't have to look at it.
You don't. You can feel it, and it's really like a twisting. It's really painful. It's hard. You do feel it, but I don't like to look at my P&L because I think it messes me up for good and for bad.
Yep. Oh, another winner.
No, I'm laddering puts in Netflix now.
Nice.
Oh, it's becoming a
core portfolio.
Core portfolio.
Core
Got it.
position.
Got it. I'm assuming Netflix is lower.
It is. It's at 95 right now.
As a contrarian.
Huge move.
Yeah, down $4 and change to under 95, 96. Yes.
So here I want to do some worst case analysis. Kind of, I think it's always good you pay more attention to the risk and downside. If you can try to avoid majority of the risk or stupid mistakes that you make, the profits will come in.
Yeah.
So these are the two kind of relatively more challenging days in the past 2 weeks. The week before Tuesday, that was a pretty big update. I think it's up more than 1% or so. So you see the put side never got even touched. The call side constantly got challenged. But still, for these 2 days, last Wednesday is fine, right? It was mild. But still, for these 2 days, we saw 45% and 62% of the time that the stock price staying in the range. So you have tons of opportunity to manage at 25% for these iron contracts.
It's amazing how the numbers work.
Yeah, that's why you can't be a greedy pig. You know?
Yeah.
You had opportunity to exit the losers.
A lot.
Is basically the point here. Is like, sometimes you want 50%, but if you're sitting there at 25%, you got to kind of have that flexibility and say, you know what, it's a good trade, I'm out, done, and then you avoid some of these tail risks.
Well, the last thing you want to do is you're able to take off at 25%, and you wait longer and get into a situation like what you described. You have to roll and put them back and forth. Then you take it off at break even.
Yeah.
Which you I take like 3 more hours to back even. I could have just take 25% profit, right?
Yes.
The last slide. This one is the overall duration outside the put and call. Long term, 11% of the time, the position sits outside of the call side, and 9.7% outside of the put side. So slightly, definitely consistent with what we observe in the market, more to the upside, right? 79% of the time, the underlying stays in between the two strikes. And remember, these are 20 delta strikes, not even 16. So majority of the trades, you should have tons of time to manage.
At all-time highs in a bull market.
Yeah, and that's outside the probability.
No, I mean, you're staying inside. Because here, we always talk about, volatility being predictive. Is it easier to predict volatility in a shorter time frame? I mean, this is the shortest time frame, a day. Or is it easier to do a year out or 45 days out or 90 days out? It's always going to be easier shorter term. You're going to be a lot more accurate shorter term. So that plays into the hand of retail investors who are obviously not making markets. We're picking markets that are already there. Couple that with high implied volatility. Couple that with low implied volatility, knowing that you're going to get a lot less credit on what you're doing. It makes for a pretty dynamic game that's got a lot of odds in your favor with the strategies you're using.
But this also, because I get that question all the time, like the probabilities, how reliable are they, or deltas, how reliable is it? It's hard to measure because there's so many variables there of how, are you talking about 30 days, 40 days, 1 day, whatever. Sure. When you're looking at this, the long-term inside ratio of this trade, if you're selling the 20 delta short options and buying wings, it's probably a 60 to 65% probability setup when you start the trade. You're inside 78% of the time, and so you obviously have these outsized moves, but the majority of the tests are telling you that the probabilities you're seeing, they're probably understated. The 65%. It's staying inside almost 80% of the time. So it's telling you that, on those shorter dated options, it's the same sort of thing as the 45-day where the probabilities are and the volatility is usually overstated, even if volatility is low, which it is right now.
Yeah, and also this number is slightly different from the probability of expiring at the expiration inside. This is actually the average duration that the underlying price stay within the put and call strike.
Yeah.
So, which means you have a ton of time to manage that.
Totally.
You don't have to wait until the expiration. Last one. Last slide. This is what happened in November. Since November 1st, we saw if we manage 25% winners and without stop loss. So we only saw one day that we're losing money, which is only $850, which is way better than what we saw in the previous slide. So if you traded in these 20 plus days, the cumulative P&L should be more than $3,000. Average daily P&L is $144, including that loser. So if you manage, you should expect 100 plus average daily P&L, which is really good for premium sellers.
It's an awesome look.
It really is an awesome look.
Yeah.
I mean,
These are the key here is this is a short time frame. So we're not trying to make some overarching takeaway, but this is a look back at a recent time frame. If you're wondering, what these strategies play out in when you look back
here and now, today's environment, today's
right now.
market.
Yeah.
I mean, you can't get any closer than what you did here. I mean, this is not looking out 5 years of data. 5 years of data. I love it when we're doing 45-day strategies, but in 0 day, you really got to be within the month. I think what I mean.
Exactly.
Because markets move, volatility moves, interest rates move, everything.
Underlying price so different.
Yeah,
than 6
sentiment,
months ago,
everything.
right?
Yeah, totally.